What's up, everybody? Welcome to the Stocks channel. Today the stock market closed at a brand new closing all-time high as SPY has cleared above 500 yet again. Are the bears going to continue telling us that the top is in? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. Today's SPY was up 0.69%. So, well, stocks went up again. So now we beg the question, are the bears going to continue to tell us the top is in as we just continue to make a brand new top? This is the problem with being a bear in a bull trend and thinking you have the power to call a top, because now SPY is closing at another brand new closing all-time high after bouncing off of support within a powerful bull trend. And this is really now just a textbook higher low as we continue higher, which is exactly what I told you was the highest probability chance. Remember, there's no magic here. We follow price action and trend, and I told you we had the highest probability chance to bounce off of that support and make a new high, and I told you that doesn't guarantee we will. It simply means that's the highest probability chance, and we are traders, so we need to take the highest probability chance, and we need to remain profitable by having good risk reward ratios. So anytime in a bull trend you get the opportunity to buy at support, you want to take that opportunity because the trend is telling us we're likely going higher. And if you're not taking these opportunities to buy low, I just don't see how you're going to be profitable if you're either missing the opportunities or you're chasing it after the fact, because now you don't want to be buying up here at resistance. This is the time to be locking profits if you bought down here near support. And yes, even though I think there's a good chance we can go to 507, we have no guarantee that we will. And tomorrow is PPI data, so if we have the same reaction that we had after CPI data, this could just be a double top rejection and we could go right back down to support. So right now, all that we know is that we still have a bull trend with price action above all the moving averages, and we're breaking out to brand new closing all-time highs, and we have higher price targets, which means we can and probably will continue to climb higher. At some point, this bull trend will end, but I'll tell you right now, everybody that continues to call a top continues to look like a fool in the rearview mirror. And you're only really getting about 1 day pullbacks, as you can tell from the chart, before we just continue higher. So it goes without saying, this is a very powerful bull trend and not one I would bother trying to call a top in. You can make a lot more money being a bull in a bull trend than you can being a bear in a bull trend, and it's really just as simple as that. I don't think it requires too much more explanation than I've already given. So going into tomorrow, we do have CPI data. We did fill the gap above, and we have plenty of gaps below, so I still think this is a risk on market until we break down below SPY 490. Below 490 to 491, we're likely going to start filling some of the gaps to the downside, so simply get risk off. And remember, you are a retail trader. You can move like water at the click of a button. It is those big money players that have to think methodically and move slowly. And right now, they are clearly still long on this market until we start to see high volume selling. So yes, tomorrow should be a pretty fun day. And I do think we're still in the blow off top scenario, which means we could hit these upper price targets as long as we stay above 491. So do not overcomplicate it. It's really just as simple as that. On the NASDAQ 100 triple Qs, we were up 0.3% today, and we did fill the gap above 434. So we can delete that gap, and we do have price action above all the moving averages with a bull trend. So that means we could be heading into the 440s with that price target above 442 on the breakout above 437. Now, if we do not break above 437, this could be a lower high rejection, but we're not going to know it's a lower high unless we get a lower low, which is going to require the breakdown below 425. So below 425 or even below 428, this is a no-brainer risk off market. But as you can tell from the price action, we're currently above both of those levels, so it's a risk on market that's likely trying to go higher. So tomorrow will be a big test for the bulls. If we continue to push higher after the data releases, we should go up into those upper price targets in the 440s. Get risk off below 428 or below 425, whatever fits your risk management strategy. On the Dow Jones, we were up 1.03% today, and I told you above 385, we should hit 391, and we are still above 385, above all the moving averages with a bull trend, so I still think there's a good chance we are going to 391. If at any point we break down below 377, it's risk off, so it's really as simple as that in the Dow, and you can also use the risk level right here at 381. On the Russell 2000 IWM ETF, we were up 2.67% today, and the Russell 2000 is pushing towards my price target I have up there at 207. And actually, with the latest price action, I actually think we're going much higher than 207, but we'll go ahead and take it day by day and level by level. And right now, we need to get to 207 and break above it before we can go higher. And then above that, we should go to 214. Now we did open a gap today, and I do think this is something you should be paying attention to, because if this gap does not fill, this is a breakaway gap, which means we are definitely going towards 214. So do not view this as we have to fill this gap. This could be one of those breakaway gaps that does not fill like you're accustomed to seeing on SPY in the triple Qs. Stay bull above the breakout at 199, and it's really as simple as that, because above 199 we can go much higher, which means we could even push into the 220s. On the ARK-K ETF, we were up 2.26% today, and I told you on ARK-K we could bounce off of the retest of 48 and then come up here towards this gap fill above 52, and it looks like that's exactly what's playing out, so there's really no reason to change what I've already told you. Above 48, we're going towards that gap fill above 52, and then if we break above 52, we're going higher towards 54. It's really as simple as following the price action, and we do have a bull trend above 48. Price actions above all the moving averages, and we now have a gap again, which could be a breakaway gap, which is down here right around 50.56. So stay bull in ARK-K above 50 and definitely above 48, because we could be going higher. On the VIX, we were down 2.71% today, and the VIX has now crushed down below 15 for 2 days in a row. So this spike in fear during the pullback was a buying opportunity, which the VIX is now telling us is a low fear environment as we continue to crush lower. And if you know anything about Fridays, they are typically a VIX crush Friday, so we could go even higher tomorrow as the VIX continues to crush down towards 13. On Bitcoin, we are currently trading just below 52,000, and we have hit all of the upside price targets, so it could be possible at any point now that Bitcoin could be reaching a top and ready for a correction. However, if we break that price target, we could start to continue to go up parabolically higher towards the next price target just below 57,000. So Bitcoin is really as simple as staying bullish above 47,000, because that's the bull breakout. But if you're buying up here, you are taking on a lot of risk, because we have hit a lot of the upside price targets, which means we could pull back at any point and test that breakout. On Nvidia stock, we were down 1.68% today, but the price action is still above all the moving averages, and we don't have earnings until next week, and I still think there's a good chance we could hit 750 before earnings. However, there are some warning signs on Nvidia. If you look at the hourly chart, they are very obvious, and we're not going to go into them today. But I've talked about it on my Discord of why Nvidia could be flashing some warning signals, and they're definitely ones I would not be ignoring. So if at any point Nvidia does break down and we break down below the 5 EMA and lose support at 703, it does mean we could be coming back down to 670. However, we don't have any reason to believe we're selling off above the 5 EMA, so it is possible we are going to continue to push higher into earnings and then possibly see profit taking after earnings. On Tesla stock, we were up 6.22% today, and this is just another one of those trades that we absolutely nailed, because it was a simple pullback into support at 183, and I told you it was as simple as staying bullish above 183, and this was a buying opportunity until we start pushing higher towards 207. And you can clearly see from the price action today on increasing volume that we broke the resistance at 197, and we are well on our way to the price target. So now in Tesla, stay bull above 193, and then above 193, we're looking for that target at 207. But I do believe we're going to blast through 207 and go higher. And I actually do have this as a trade idea right now, so I won't spoil it. But in the short term, we do want to look for that price target at 207. And then above that, we can and probably will continue to go higher. On Apple stock, we were down 0.16% today, and we are continuing to test this rising 200 daily moving average of support between 182 and 183, and I do think this is the buying opportunity until we start pushing higher towards 195. In the short term, we want to look for a gap fill just below 187, and if we break that, we could come all the way back up to retest 190, and then on the break of 190, it should be a very quick trip higher towards 195. If at any point we start to close down below 182, simply just get risk off, because this could be a head and shoulders breakdown. And if we start to break down below the neckline of the head and shoulders, we're likely going all the way down into the 170s. So jumping back over to the S&P 500, I have warned you many times about ignoring the chart and following Perma-Bear's opinions that we're reaching a top in this market, and they have been calling tops going all the way back to last year every time we continue to go higher. The bears are there to tell you it was just a bear market relief rally, and then we made a brand new all-time high, so they couldn't use that excuse anymore, so now they're just going to continue to perpetually call a top during a very strong bull market. And if you're buying into this fear-mongering crap and you believe they have the ability to call a top, you are going to miss the entire damn bull rally. You've probably already missed the bull rally if you've been buying into this fear-mongering crap and these Perma-Bear's opinions of the market. And that's why I constantly remind you that nobody's opinions mean anything. We're simply looking at the price action and the trend, and we're going to take the highest probability chance to make profits by trading in the direction of the trend and following the price action. If you have not yet seen that this is the way to trade, then just continue to educate yourself. You're going to get there eventually. And remember, it is always coming down to risk management. I don't care if you're going long or short, you need to manage your risk. And if you're shorting without risk management at all-time highs, you're going to learn the hard way why that is just a horrible idea. So be disciplined, know these critical risk levels, and understand it is always going to be a better time trading with the direction of the trend, and we still have a bull trend. It is a bull trend until it's not. Hammer that into your brain. Block out the noise, follow the chart, and you are going to do just fine. If you want to come crush the market with us, you can consider joining Bank Trade Alerts, where I will send you all of your buy and sell alerts directly via email and text message. And we are absolutely crushing this market, and it's very simple to follow because we only trade 2 ETFs. We trade TQQQ and SQQQ, and we crush the market. You can find out how to join Bank Trade Alerts by clicking on the link in the description of this video. If you want access to all of my intraday updates and technical analysis, then you need to be in the Stocks Channel Discord server, and you can find out how to join that below as well. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.